Anyway, I understand. Sure.
Well, now we can track it daily. If we actually wipe it out daily, then we can know how many. Valentine, please can you drop your mic?
Studio. Mics are up. Studio is live. Please raise your mic, sir. Okay. Good morning. It's time for us to get into business with Rotus. At this time, of course, you know the WhatsApp number is right. Staying one 0809 444 That's 0809 444 And on Twitter, we're at Smooth981FM. The hashtag is Business Express 981. And we're live on YouTube.
Thank you, sir. Good morning, Valentine. Good morning, Lagos.
Rotus.
And good morning to our special guest, Mr. Wale Okunriboye, Head of Investment Research at Sigma Pensions. Wale, good morning.
Good morning, Rotus. Good to be here.
Welcome, sir. So, Wale, look, in fact, Lagos, you already know what the conversation is going to be all week. We're asking all our analysts their take on what's been going on with oil prices, if they think things are going to continue as far as the sell-off in the markets. Well, let me start with that. Ugly things on the markets.
Yesterday was red. No Valentine.
Exactly. Very
red. Yeah.
Is there any room for bargain hunting on the Nigerian Stock Exchange? I just want to get your outlook for the week, whether it's a dangerous time to try to buy any stocks on the cheap, or how you see things essentially.
Buy the dip will be a very scary strategy now. But I think fundamentally what's driving all the panic essentially is the low oil price environment we're having. And we know where it's coming from. Is because markets are increasingly concerned that crude oil markets are going to have to grapple potentially with an excess supply problem of north of 4 million barrels per day, because we're facing both a demand side problem because of corona and also an excess supply problem. And so because of that, that's why you've seen prices respond the way they responded. I mean, for oil prices to go back up, we need three things to sort of happen. We need Russia and Saudi Arabia to sort of get back together. We need maybe a cure for the coronavirus, maybe to sort of come through, or we need maybe some war in the Middle East.
War.
Yeah, I mean that takes off significant supply capacity, but it looks less likely you're going to have that. And so essentially, we may have to stay with this very low price environment for maybe 2-3 quarters, and then we'll see what happens after that.
Okay, there's a tweet. I sent you this tweet, and I know I tweeted it. I reposted it on my page. There's a young lady. I think she's from the UK or Europe. She follows African markets, and she essentially said that she's pricing in a recession for Nigeria if oil prices stay where they are. And if you're saying this could have to hang on for 2 or 3 quarters, if we have, South Africa is in recession, I think Japan is in there. Bloomberg predicted that maybe Australia was going in. Is the R word too big to use for us now, or should we be positive?
I think it would depend on how we respond to the crisis. I think how our policymakers respond to the crisis. The last time around, oil prices came so low, our policymakers didn't respond in a way that was sort of seen as credible. So I think we went through that difficult part. So I think we're trying to see what the Buhari committee comes up with.
Fine. Let's discuss that. So Lagos, President Buhari has put together a committee. It says they set up a committee to respond to the impact of coronavirus and the oil downturn on the economy. What are the options? Lagos, give us your options. What can Buhari's committee do? What can it possibly do to address corona and
I think credibly too, for the budget to remain credible, we'll most likely have to revise the budget lower. Most likely we'll have to do that, because I mean, if you have less revenues, the other option is, unless you plan to borrow more, which may also be an option as well, you may probably need to borrow a bit more, maybe more on the local side, less on the offshore side, because I'm not sure if you come up with a Nigerian Eurobond proposal now, you find many investors wanting to sort of buy, or if you buy it, then of course the rate you may have to pay may be more expensive, so it may not make sense from a cost benefit analysis whether I should borrow locally or borrow offshore. But for the budget to remain credible, I think we might need to see cutbacks there. But the problem with this budget is largely driven by increases on the recurrent side, and some of it are things like you increase salaries, your borrowings have risen, and so it's very difficult for the government to be able to do that. So we're trying to see what proposals they come up with. I mean, there's also the possibility of the D word in the room, which nobody mentions, because I think it's sort of, I think that will also have to be on the cards as well, because I mean, if you have that, then that's the way some countries have adjusted to this crisis. I mean, the Russian ruble I mean, if you look at the Russians throughout the crisis, that's what they always do. They're always quick to, anytime they go into this fight, they don't say the currency can't move.
Right.
They always move that, because if you do the adjustments there, then at least you get the revenue kick off on the local side. So at least you can run your budget in whatever way. So I think we've been trying to see, but I think there needs to be some reassessment of the budget, whether it's still implementable given the revenue assumptions that are in play now. I mean, the currency also would also likely also be need to be reassessed, and then your plans are around financing the likely deficits, both on the current account side and as well as the fiscal side. How they look to finance that, I think those will be considerations they would think about.
Excellent. So what about the central bank? What about on rates? Is there anything? I mean, we've seen other countries. I think Australia, the US, cutting rates. I mean, is that an option for us with the environment we're in? What room do they have there on the monetary side?
Usually, in a normal economy, when things like this happen, you would always want to reassure markets that there's enough liquidity. But in our own case, that will be difficult, because if you allow much excess liquidity, I mean, central bank has always, I mean, the raise in CR we saw in January has always been because they're trying to mine liquidity. If you allow liquidity so much, everybody can see now that it's unlikely the central bank will be able to hold their exchange rate if all prices stay where they are. So more likely, any naira liquidity you have now, you will more likely be looking for a way to gain dollar exposure or dollar demand. And so I don't know how the CBN will sort of try and manage that problem, because if they reduce rates or try and flood the same liquidity, then you may end up seeing more of that liquidity going chasing after
Dollars.
USD as against
Which is what they don't
other
want.
assets. Yeah, which is what they don't.
Okay, let's take a look at some
choices, yeah.
some messages here very quickly. Ayodeji from, I believe it's from Abuja. Ayodeji says, it seems Main Street is unaware of the fall in prices. Yesterday, parallel market rates didn't have any increased volatility. What trended was the sack of the emir. Is it safe to say we have reduced our dependency on the dollar? Or it's just a matter of time. Just a matter of time.
I think on the FX, it's always because the central bank has. I think the big lesson the central bank learned from the last crisis was that keep the parallel market well supplied as a way of anchoring expectations.
Right.
Because the last time around they stopped selling to that segment, and then the parallel market went on its own. So as long as the central bank continues to sell to that segment, that rate is going to remain very strong. The big question now is, can they credibly continue to supply that segment given where oil prices are?
Right.
Again, by next month, Nigeria's receipts from oil will most likely shrink. So how much the central bank gets into its reserves would fall, and they will then need to start asking the question, we need to probably start rationing how we sell, how much we sell, because you have a lot of foreigners who are also trying to get out. You have a lot of local demand that is also there. So I mean, it's like when you have a fuel scarcity issue, I mean, you have limited fuel supply and so much demand. You need to pick who you are going to and how you're going to ration it out. So I think ultimately that question is going to be on the table for the central bank at some point. It's a question they will need to answer. And who they decide to pick or not to pick, some of those segments would obviously cause a lot of panic around which segment of the market they decide to intervene in. But we'll be trying to see how they sort of go about that again, because by next month, I mean, we'll start seeing much lower oil prices. I'm sure the NNPC as well will also struggle, because Saudi Arabia is targeting most of our market segments with huge discounts.
Right.
Can we also match those discounts, given the distance to our key market? India is our biggest oil export destination, so clearly we would obviously have to offer the Indians very big discounts because of transportation costs, to sort of still buy from us. So, I mean, otherwise, I mean, I don't know how we're going to manage it. The issue of unsold cargoes is likely going to remain on the board now for quite a while. So by next month, we would have to make very big decisions quickly if oil prices don't change.
Right.
So, I mean, depending on how you, like I said, I don't think the current status quo is sustainable. So something has to change in the next 2 to 3 months.
Tight stuff. Well, thanks for the analysis there. Dakpo says the budget should be reviewed and devaluation may just be around the corner. We have overemphasized the issue of diversifying the economy, but all the CBN does is just give single-digit loans to farmers. He puts it in quotes, without providing conducive environments and infrastructure. But I'm sure the CBN governor will continue fighting the exchange rates. That is from Dakpo. Ibrahim says cut costs. You'll be shocked to find out that the same people's jumbo pay will cover some states' FAC, which is the Federal Accounts Allocation Committee, for months. Let's see here. Good morning, Rotus and Wale. The D word is the best option. Already there's a scramble for dollars in the market currently. Okay, see, so Damilola from Aja, he's seeing things on the other side. There's a scramble for dollars in the market currently. As for government, they need to start developing other sectors. Yinka says, got home very late last night and had to eat and watch the news simultaneously. Now the news of Buhari setting up a committee to study the impact of Corona on the economy almost choked me. choked me. I was like, are we deaf? Okay, why must Buhari announce a committee? Don't we have a human beings in our budget office? I doubt if they're aware of Russia and the Saudi face-off. I even doubt if they know what shale oil is. I'm just angry this morning. Yinka, calm down, calm down. Prince says the Minister of Finance said yesterday that the budget will be reviewed downwards. Some projects and expenses will be removed, and some borrowing will be put on hold while they drive tax. I think that's going to work. I mean, because that's going to reduce. That's going to reduce revenue for us now.
This is a very big shock. We're going from 57 to 30. I mean, that's almost half the oil price. Well, not half. I mean, significant drop down in the benchmark oil price. And important is that Nigeria's crude oil. I mean, what's cost of producing crude oil here?
Right.
That's a question probably we've not answered. I mean, if you look at most countries, they say between $20 and $30. So at these levels, if oil goes below 30, some of our oil fields it may not be profitable to produce oil on those fields relative to fields that have a much lower break even. I mean, Saudis produce oil between $2 and $10.
Right, very low.
I mean, it's very low, so they can last a low oil price environment. But for us, it may be a bit difficult if oil prices move lower.
John says, "Good morning, Rotus Wale. Is devaluation imminent?" Okay, I mean we've continued saying it. Would it help to at least hear from central bank or hear from somebody because everybody else has been. We've seen Trump is all over the place talking about Corona. Boris Johnson has had like 3 press conferences now, also talking about the economy. All that would it help to at least just hear something, some kind of language, or are we supposed to make do with the committee announcement? Is that enough? Or because I think these things don't they help to calm markets, or what do you think? Would it help to at least hear? If the president called a press conference or the central bank governor called a press conference, just quickly say, okay, look, we know what's going on. Everybody calm down. Something. What do you think?
It's not in. That's what I would say should happen. Well, I think the problem with us is forward guidance from our policymakers hasn't always tended to be credible. So even if they do tell you that, you're not always sure whether it's exactly going to be as they say it's going to be. So I mean,
that's the issue.
I mean, that's always the issue. I mean, but the central bank governor did say earlier, I mean, that if oil prices get to below 40 and reserves get to $30 billion, then he would look to adjust maybe the exchange rate. So I think maybe one has happened, the other one hasn't happened. So maybe when we get there, we'll see that.
See what happens. Moses here. The issue is though on the stock markets, the government should introduce quantitative easing while reviewing the budget. Well, that's more liquidity now, Abi. That option may not.
Stock market bulls.
Yeah, that option may not work for us, but it's an option. Let's see here. Okoro, good morning, Wale and Rotus. What do you say to hedging against dollar exposure using forwards? That's okay. That refers to individuals, or Okoro? Are you talking about the hedging for companies? I think countries. Mexico hedges for oil. Yeah.
They hedge their crude oil exports every year. It's a very big program, so it's quite expensive.
Well, you have to pay a premium.
You have to pay a premium to that because on the scale of a country like Mexico, they're probably producing more than 1 million barrels, so it's going to be quite expensive. But for smaller companies that are oil producers, they can hedge. I mean, Nigerian oil and gas companies, typically with loans to banks, always hedge.
Okay. Let's see now. Coyote, the CBN works with cash flow and not balance sheet, so they'll be able to meet the cash flow burden for a couple of months. Devaluation will be the last option. Ayo from Yaba. Good morning, Wale and Rotus. In Nigeria, we need a committee for everything. The economy is squeezed from multiple sides. Low rates on tills and fixed income instruments, low crude oil prices, depleting reserves, scale of the coronavirus. It doesn't look pretty. It doesn't indeed, Ayo. Imo from Ikeja. I can imagine our leaders doing us Yimu. Recently, the State House of Assembly approved about 2 billion naira car loan for the governor. Not only we, me, and you, they worry about the economy. So he's saying that the rest of our leaders don't care. They care. They're going to be hit by this. Wale, really quick. Perhaps this is not coming at the best time. The trade deficits. I understand we recorded our first trade deficit since 2016. Looking at Q4 2019.
It's like we don't catch a break, right?
Just bad news left and right.
Yeah.
Can you speak to the trade deficit that we?
Well, I mean, I think what we've seen in the last 1 year is that, I mean, on the CBN side, they've also reported.
Can you define it for our listeners?
Okay, trade deficit is when your imports exceed your exports. You have a trade deficit. When your exports exceed your imports, it's a trade surplus.
Okay.
So we had a trade deficit. Imports exceeded surplus. I think two things that come to my mind. One, if you keep interest rates low, you try to spoil bank lending. Some of that would need to be imported if it's capital intensive project. And also, I mean, dollars have been available for quite a while. So naturally, I mean, we've been trying to get the economy growing again. It just means that import demand is going to pick up, and we've seen that throughout most of the data we saw last year. So they said that import demand did pick up, particularly on the FX side. So we've seen that pick up come through, and I think that's what's showing up on the trade deficit numbers.
Oh, wow. More things for them to worry about. MPC is end of this month.
Yes, well, sometime this month.
Sometime this month, will be that will be one
difficult.
That will be one interesting meeting that we're looking forward to there. Lola is asking Rotus and Wale, please take us through what will be the effects of devaluation if it happens. Can you answer that for Lola? What the effects of devaluation? We're all poor now. I mean, if it goes from 360 to 400 or whatever.
Well, I think the biggest from the government side, it means the budget is fixed at 306,
right?
Technically.
But
it means the government at least has more naira revenues to be able to implement its budget. Of course, it means that there will be inflation for one year or so, just because you're having prices will have to reset, particularly on imported items, will have to reset higher. Well, and also it enables the central bank manages the FX picture, because I mean, if you have if you're selling at current rates relative to selling at much higher rates, you'll be able to at least sell. It's like rationing pretty much.
Right.
Not everybody who is demanding at the current rate would still be demanding for dollars at a much higher rate. So,
thank you. That's the impact, Lola. Yinkus says here, good morning, Rotus Wale. A new committee again. What's happening to the existing economic advisory team that has Mr. Riwani in the mix? My advice is that they should open the borders officially and do their job. Regards from Yinkus. Ayola, good morning, Rotus and Wale. CBN has been rationing FX for us for as long as I can remember. So the question of rationing is not the issue. The real issue is how we may ramp up our domestic capacity to produce many of the things we import and actually execute our exports expansion strategies, because we have fantastic policies in place, but execution is weak. Akin Fala, that's his message. Is there time for that with regard to the short window that we have? Is there time to...
We've been diversifying our economy since
forever. Let's see here. You have to add your name to your messages. The President, Minister of Petroleum, has not come out to address us. We are not in a banana republic. The NSC was badly hit yesterday. Where's all our diversification mantra? Didn't add your name to that. Do include your name. Kester says Lebanon is about to default on their sovereign debt for the first time because their foreign currency reserve has dived. How's Nigeria handling our own reserves with all the FPI set to fly to safety based on current happenings? So, are you also worried about that? Are you share Kester's worries?
Because yesterday, I mean, you did see quite a bit of sell-off, mostly from the foreign accounts as well, both in the fixed income, automobile space, as well as in the equities market. So, I think the question is, I mean, globally there's risk off, so that means all investors will be trying to return to cash as quickly as possible. And so, I think that's what's driving most of the sell-offs we've seen in the last 2 days. I mean, in a lower price environment, there's no way any foreigner would have confidence in the Nigerian economy.
Right.
They just wouldn't be, given the way oil dominates our FX receipts. So I think that's there, and globally as well. Look at what's happening globally.
Right,
everyone is trying to get into cash, because it's like we're in 2009 again. That's the sense you get to take risk off the table essentially. And so Nigeria is a risky environment. I mean, we're also going to be worth it by oil prices. So every investor is just trying to get as quickly as possible into cash. And then...
Good morning. This is from Tunji. Does opening a DOM account to store value still make sense at this time? Well, Tunji, what do you think? Tunji, what do you think? I think you've answered your own question. We have so much more to talk about. Well, Valentine is giving us the air traffic control signals. Well, while we'll talk, I mean, there's GTB's holdco structure and a number of other things, Access Bank's results, but this oil thing has just been dominating headlines. Wale Okunriboye, Head of Investment Research at Sigma Pensions, thank you so much for joining us. Really appreciate you, sir. And everybody, thanks for your messages. This were fascinating times. We'll keep monitoring things and seeing how they go. Business Express, we'll see you all tomorrow. Thank you.
Business Express on Smooth 98.
Wow. What's the time? Thank you.
Thanks, bro.
Dude, are you heading back to Korea as well?
Yeah.
So